Hello friends, good week, and this is the weekly review for 7th of April 2013. What a week we have had. Almost all the week we had moves, and these moves were concentrated mainly starting from the night between Wednesday to Thursday, and all Thursday and Friday, thanks to the quantitative easing in Japan, number 2, and of course the non-farm payrolls. In this weekly review, except of giving you the trades I have on my list, and I have a lot for this week, I would first of all try to explain what actually going on. Okay, let's start with Bank of Japan. They print more money. Comparing to the US dollars, it's around 500 billions dollars. It's crazy. It's almost the amount that Bernanke is buying, almost. So, just think about it. It's unbelievably a lot, a huge amount, and for economy which is something like 3 times lower or maybe even more than the U.S. economy. That's too much. Now, such thing never done before. So no one actually could predict what's going to happen. I keep reading reports. I can keep hearing analysts. They say it's half-half, and half say it could lead for a disaster, half say it could lead for huge recovery. It doesn't matter how we take a look on that. It is increasing a depth, which is never a good sign. If you remember my weekly review a few weeks ago, I explained you on a simple metaphor of borrowing money to a friend. Sorry, from a friend, right? And remember that? And that's the stuff. That's exactly what's going on. Borrowing money is never good sign. So whatever they do, after many years, it could turn to be very bad. And if it keeps holding the economy on very slow growth, of course, it could affect exactly the other way. So, what Bank of Japan is doing, they are printing much more money. Let's take a look on the Japanese pair. This is the dollar yen, right? I'll take a look on the mainly chart. See that? Straight move from 80 to almost 100. It's around 2,000 pips. Straight move. Compared to the pips, it's not that much, right? But percentage is a lot. More 25% or so. So the amounts really are crazy. If you remember, I was always saying that I predict a down move that will take us down at least to these levels. I expected much more, but of course with quantitative easing, I can keep my predictions only for myself. When the bank intervened so strong, right? Of course it ruins the prediction, at least for a short run. But I want to, exactly on this point, I want to show you and remind you something. Do you remember that Bernanke started his quantitative easings, right? And QE number 3, let's take a look here. QE number 3 started right here, 25th of November 2008, and this is here. See that? This is the end here. That's where, right? That's where we are. And this is the euro dollar. Right after that, the US dollar went to a very strong decrease. See that? 2,000 points. But I always say the market will do what the market has to do, and then we got to drop down. Exactly here, believe it or not, on 18th of March 2009, Bernanke came with his quantitative easing number 2, and that's 18th. It started here. Since here, from this point, 18th of March, we got a rise on the euro dollar all the way, starting from around 130, all the way to 150 again. Also, 2,000 pips. Then, we all remember what happened to the euro dollar then. and mainly to the US dollar. Okay, we can take a look on the pound dollar if you like. It doesn't really matter what the dollar pairs we will analyze. It will always be the same. Take a look. Okay, this is merge. Where is that? Here. Okay, that's merge 2009. 18th here. Okay, since here pound dollar rised all the way back to 170 again on 2009. Okay, and then we all remember it crashed back to 144. Right, so and then of course in 2012, let's go back 2012, here we go on September, right, he came up with quantitative easing again. From here the market was already quiet, right? This is a pound dollar, didn't do much, only 500 points. The euro dollar did the same. Let's see that back here. Okay, not much rise, 800 points. Australian dollar was pretty much on the same levels where we are. 13. Here we go. Okay, 300 points and keep playing around the top. So on the Kiwi number 3, the market was now very, very, very calm. Of course, the indices kept going up for new highs, but the US dollar, the currency, which that was their main goal, right? That was their main goal. They never cared too much about the indices. They care mainly on the economy. And the economy grows is not because the indices are going up. Economy grows is because the economy is going, the data is going, the reports is going up, right? And the US dollar actually did not decrease in its value on the QE number 3 too much. Exactly the opposite happened. Of course, it's not fair to say it's all only because of the US dollar. Of course, it's not. There are many geopolitics things like in Europe and Britain and everywhere else. But the fact is that after quantitative easing, of course, the currency devalued. But the market always is doing what it has to do. So, going back here, I want to show you my analysis. Taking a look on a weekly chart, we see a monster divergence developing. It's not a question. It's pretty clear. RSI is dancing around the top. Such situation never happened before. It happened that RSI on a weekly chart was in 2005. But then we got a crash of more than 1,000 points. Before that, it used to play once. That was here in 2001. Play, and then a big crash happened of more than 3,000 points. And of course, we all, well, maybe not all, but most of you probably remember the 97, where we got 1,500 points correction down, and then we got another rise up, and we all remember what happened since then. Of course, it was not such aggressive then, and the intervention was not on these numbers, but the fact is that there is a weekly divergence forming. I don't claim it's going to happen this week, even though it might. It might. The market might understand, hello, that's too much, right? But exactly from the other side, it could keep growing to the psychological 100, and I would say more than that. Take a look on a monthly chart. Monthly chart, there is a monster divergence, monster trend line going all the way from 1990, even earlier. See that? All the way going down to here, and that could meet us around a 108, maybe 110. For the long run, of course, it could happen at the end of 2013, maybe the beginning of 2014. It's all possible. But take a look at here. You see that where the RSI, weekly, monthly chart RSI, where it aims. You see that? It aims to the 80. Just imagine what's going to happen on, above the 100. How huge the pressure, the bearish pressure will become, right? And that's exactly why I say, and more than that, I will tell you more than that. Take a look again on the monthly chart. Between these two highs that should be created, there is bearish hidden divergence forming. And that's why I claim the higher, the stronger the bearish pressure will become, and of course then I expect much bigger correction down. So the bottom line, could it rise to the 100 and maybe even higher? Of course, and it's very very welcome. But remember my words: the higher, the stronger the cycle will come. The market is always does what it has to do, and that's exactly what will happen here again. Once this enormous numbers that the Bank of Japan is using, and all the purchases will turn to be some to the real report, and the economy will show again small growth. The belief on on their economy will reduce, and we all familiar with that from every other country that did it, and of course the same with USA. Right? So that's my opinion, and of course now let's take a look on the Euro Yen. Same story. This is the monthly chart, right? There is a convergence here, which means it still could push higher, right? But between the main two highs, there is a bearish hidden divergence forming, and this is exactly why I think that this rise is limited. And taking a look on a weekly chart, we might go up to 128, up to 130, 132, 134, and maybe even 137, 138. But there is a monster divergence forming on a weekly chart. So the higher, the stronger the retrace will become right after that. The first part of the cycle move happened here. If we measure waves on a weekly chart, we get 1, 2, 3, 4. Now we are most likely in front of a 5. 5 could lead us to one of the levels I just explained. We're going to make a stop there, and we're going to for A, B, C move down. And this is my opinion for the Euro Yen. Now take a look here on this line. You see that here? This line, this 3 spikes line should meet us around 132. Right? So very, very, very likely that the Japanese pair will keep growing up, but it is limited, and it is limited mainly because of the fact that the market is always doing its cycle with intervention or without intervention. It always happens. Another example for interventions I will show you here, if you don't mind, on the dollar franc. This is very fresh intervention. They say they're going to print money and sell the Swiss just to keep the Euro Swiss above the 120. Now they want to keep it even more, but that's not the point. We got the intervention, we got it 2,000 plus points up. Right there, we got all the way down 1,000 points because of the despite of the intervention. So again, what I'm trying to say is the market is doing what the market needs to do always. There is no other way. Right now, because of the numbers, of course, is bullish. Of course, the environment and everything looks too good, but be careful with that. This is a party full of alcohol right now, and we know too much alcohol cannot be good. When it comes to hangover, right? Many people will suffer from that, and that's exactly where it aims. So again, right now all looks good. Remember my words. We are aiming very critical levels, very critical conditions. Only question of time until much bigger cycle, natural cycle will come. And that could take a week, that could take 4, 5, 6 months. It doesn't matter. Once the market is ready, it's going to happen. What I'm trying to say for dollar yen, for example, above 100 levels with a weekly divergence, get ready to start and make sales. So that it was very important to me to show you how the quantitative easing affect, and I hope I reached my goal and you understand what I'm trying to say with my limited English. Right? Alright, so let's continue. So that's about the Japanese pairs, of course. Same about the pound yen, just will finish with that. I do see it above 150. I do see that around even 155, maybe a bit higher. There is a weekly divergence forming. There is 1, 2, 3, 4. Now a fifth move forming. On a monthly chart, there is a hidden divergence between these two highs, of course. Even between these two highs, right? Hidden divergence. So could it push higher before it makes the huge crash? Yes. Again, in my opinion, well, I would say it's limited something like to around 160 plus before completing very strong cycle. Not guaranteeing at all that 160 will be reached, but again, the higher, the stronger the cycle will come right after that. So that's about the Japanese pairs, which will keep be in my focus for a very long run, of course, as you can understand from my words. Now for the next opportunities, euro dollar, pound dollar. If you remember my words, I've been talking about the euro dollar for a few weeks now. I said I want it below 127. I hope I will get it around 125. I did not, and the euro dollar is retracing right now up. You know what? Don't celebrate too much. The rise of the euro dollar is good, right? Especially it was. It happened mainly because of the non-farm payrolls, which turned to be bad, and I will explain that a bit more soon. But the celebration about the euro dollar should be limited. Why? Well, because there is a bearish hidden divergence forming for the euro dollar on the daily chart. You see that? Between this high to the current high in creation, the euro dollar is creating a bearish hidden divergence. Between this high, there is already bearish hidden divergence. So it could keep going. It could rise to 131 even. It could rise to 133 even. But it's very limited with this divergence. So watch out in between 131 up to 133. Look for your opportunities to sell. In case the euro dollar does not go higher, I would pay attention to the 4-hour charts, and if we get another move below this strong support around the 128.50 here, right, even 128, I would say, all right, the euro dollar is ready for this next down move. And the next down move, if and when it happens, should take the euro dollar down to 125, maybe even lower. Remember what I said many times already on my last weekly reviews. The eurozone could recover, could really recover if the euro dollar becomes very weak. So don't celebrate too much with the buys. I think they are limited, and I do expect it to stop somewhere in between 131 up to 133. Until then, the euro dollar still might rise. And if you want to enjoy from some buys on the short term, take a look. This is a bullish convergence forming on the 4-hour chart. Let it drop down. The drop down could be 125, 129.50. The drop down could be 129, maybe even a bit lower. Then look for your buy opportunities, taking it higher again. This is my opinion about the euro dollar. Pound dollar. Well, what a pair, right? Very aggressive moves, very interesting. But I remind you the fact that we have the pound dollar has a bearish convergence, right? Of course, if you want to learn more about bearish, bullish convergences and what to do with convergences, I invite you to buy the book in Amazon. My book in Amazon. You can just click my name in Amazon, Vladimir Ribakov. You will see the book that's all about convergences and what to do with them. It includes a webinar, by the way. So this is about a weekly chart. We have a convergence. On a daily chart, pay attention. Pound dollar is forming here a bearish hidden divergence. More than that, the pound dollar is forming now most likely a continuing divergence. If you remember my words a few weeks ago, I explained pound dollar still able to rise again to 154, maybe even 155, sorry, and maybe even all the way back to 156 plus, closer to the 200 moving average. It's all relevant still, and the pound dollar should stop in these levels. My final level, of course, will be the 200 moving average. In other words, 157.50, 158 maximum. I expect it to stop there, and to start its move down. Until it reached there, could we enjoy the pound dollar rise? Of course we could, and that's exactly same story as on the euro dollar. There is a bullish convergence after this sideways move. First break up, every retrace down, and that could be 40 points, 30 points, it could be 100 points. Every dip could be buy opportunity to take the pound dollar to the next levels, such as 154 and higher, as I mentioned before. So actually, the strategy that I will use right here is buy the valleys, or as many of you know it as buy the dips. That's what I would expect for the pound dollar. In case, and only in case, the pound dollar suddenly drops down and goes again below 150.50, then I would turn bearish again. Not before that. Of course, we have a lot of room to go. So this is my opinion about the two main majors, which I find opportunities for short term and for long term, of course, which I think they will go in short again. My next trade is the euro pound. I've been talking about the euro pound for a few weeks now, and my expectation stayed still exactly the same. I would not be surprised if the euro pound keep going down to this range, something like 0.8250, 0.8330. That's my range, if you remember, right? I told you I do think it's very able to reach that somewhere during April, maybe at the end of April, maybe the beginning of May. It's able to reach this level. I would also not be surprised if the euro pound make a trap here and turn up again and go all the way to 0.8650 to close its gap it has on a daily chart. Each of the levels is still relevant. If it keeps going down, then here I think it would be wonderful buy opportunity, right? Around 0.83 and lower, it will turn to be very great buy opportunity. In case it pushes higher to close the gap, it's going to be good sell opportunity again between these two highs, that then will create a bearish hidden divergence. So keep watching the euro pound. It was relevant, it's still relevant, and it's a wonderful opportunity. My next opportunity will be Aussie against the Kiwi. Pay attention to the wonderful thing we have here. Very interesting scenario. Take a look, right? There is a trend line right here between the close price, if you measure, okay, between the close price, that is meeting the pair right here. Between these two lows, there is a bullish hidden divergence forming, right? More than that, this is a bend to bend move. Going to the 4-hour chart, there used to be a divergence that was broken, but right now MACD is creating a low, RSI is creating 20. So in my opinion, in there are several supports, several important supports here, as you can see. I do think the Aussie Kiwi is going to make a stop here and going to retrace up again. How deep? Well, the first level I think will be at 123.75. Then I would not be surprised even if the Aussie Kiwi will take us all the way higher again to this trend line, this double spike trend line, something like that, and that could be 124.50. So I keep very bullish opinion, and I think this down move is limited and the up move will take in place very, very, very soon. That's my opportunity for the Aussie Kiwi. Then we have the Pound Kiwi. Pound Kiwi, based on monthly chart, you know my opinion. Based on monthly chart, I claim that not once. I think we are in front of a bottom, and the bottom could be here, 175, 170, 165. Each of them are very, very reasonable. But it is coming to the end, and something huge is about to happen. At least huge as it was here for 6,000 points. So, in other words, wherever will be the bottom, I think we are going back to something like 240 for a very long run. In other words, look for your buy opportunities. If it's investor style, you can buy and hold, if you still did not. Pay attention to the very interesting thing happened already. On Thursday, it created a false break. False break is very bullish sign. But false break could also be one of the breaks inside this pattern. It could be 1, 2, 3, 4, 5, false 5. Now we could go for a 6, small pullback, and then a 7. And that's what I want to happen. I want this sideways move to be broken in order to gain the final bullish call. If it breaks it down and go lower, then I will let it work, let it go, and of course we'll be watching the weekly and the monthly divergences to form. And as I said, I do think it is creating a strong bottom. It's not a question of if, it is a question only of time. Now pay attention to another pound cross, and that's a pound Aussie. Based on monthly chart, there is also monster divergence, but I would be talking about shorter term. Take a look here on a daily chart, right? If we measure here this trend line, it means we still have something like 100, 150 points to go. If we measure between these lows, okay, these lows and high, you see that, right? Here, between these lows, right, through this high, that brings us to the same point. In other words, I think, and just broke the Bollinger Bands. I think pound Aussie is very able to make another push up for something like 100, 150 points, and I think you should enjoy from this opportunity, exactly like from the pound dollar and the euro dollar. There is a bullish convergence, every retrace up by the valleys. Again, if you want seriously understand what to do with convergences, consider to take the book in Amazon. Click my name there, you will see the book. If you still don't own it, of course. It's not new, it's not that new. If you own it, you know what to do. If you don't own it, I think it could help you. And again, by the valleys, that's what we are looking to do. And then, as I said, I do see 100, 150 points more rise for this pair. Now, this is my opinion about the pound against the Australian. My next thing will be the euro against the franc. Take a look. This is the Euro Franc. This is a daily chart. For me, maybe I'm wrong here, but based on the intervention, for me it feels like the euro pound is ready to create here something like looks like a triangle. It is holding above the support 121. It's holding above the 200 moving average. I would not be surprised if from here it will take us again to above 122. A break of this triangle, of course, could open the doors, and a break above 122.50 could open the doors for the pair to rise again to 124, 125, pretty easy. 120, of course, is still the bottom that the Swiss bank wants to hold. But this is my opinion about the Euro Franc. I think up. And now going in few words, silver and gold. For the silver, I think up, but I would be careful. I will explain why. This is, as you can see here, okay, this is a morning star. Morning star is not that great pattern when it comes to divergences. Last time morning star happened was where it was. I saw that it was here, right? From here, silver, it was on 2012. From here, silver dropped down, and then we get a continuation move. So what I try to say, I would not be surprised if the silver will drop down more from here. Could reach the previous support, could reach even 25 before the huge retrace. For long run, I am very bullish for this, on my opinion, on the silvers. Silver has also on the 4-hour charts a bearish hidden divergence. This is exactly why I would not be surprised if somewhere from these levels it will start its drop down. But for long run, I think very, 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 very bullish. Very, very bullish. Same about the gold. The gold created also morning star. From one side, it's a false break, which should take us here for a long fly up. From other side, I would not be surprised if that would be a trap, and will push down again to 1500, maybe even lower, before the up move. To gain a real bullish momentum, this trend line must be broken. In other words, 1615 must be broken in order gold could gain serious up move. For a very long run, I think is buy and hold, but for short run, I would not be surprised even to see a trap and a continuation down move. Again, this trend line and the resistance must be broken in order that continues. And I would finish with the indices and the non-farm payrolls numbers we got. 88,000. That's the number. From one side, it looks like a disaster, isn't it? From the other side, it's not that bad. It keeps growing. The unemployment rate is going down. The underemployment rate went for the first time of several months below 14. There are more jobs in building. There are more jobs in the public sector. So it's the real numbers behind the 88k is not that bad. There is one thing that do make me wondering, and that's more than more than 500,000 people gave up on looking for a job, took a pension, or just gave up. It doesn't matter. It means the job force, the job power is losing. The people that gave up and the people that just can't find a job are losing their skills. That's a warning sign. 1 month is not enough to make a conclusion, right? If it's good or not good. Definitely, it does not contribute too much, but it's not enough to understand. If that would be the trigger for the US economy to go down again, or it was only one month stop before the continuation. Next month will definitely show us the long-term direction for the US economy. Taking a look on the indices, the main opportunity for my point of view is coming from the Nasdaq. Nasdaq has to break this trend line. If it successfully does, I think it will gain a strong bearish momentum and will take us down. Remember my what I said not once. It kind of looks like that the Nasdaq has head and shoulders here. Time will tell if it's correct or not. It has to go below the trend line in order to gain it, but it doesn't look that good. Of course, I keep my same opinion about the other indices, and that's of course the S&P, which I think will go down, seriously down, at least to the trend line, which means below 1460 or so, maybe 1460. And for the Dow Jones, same story. I do think it is creating a clear top. On a monthly chart, there are monster divergences forming. It cannot be good. And you know my opinion. The higher, the worse. Not the better, the worse. And I will finish with the natural gas. I've been talking about this one pretty much last week's. 410, 420 are levels to pay attention to the sell. More than 20 candles right on a daily chart. Maybe we'll go now for a new high. Okay, for a new high on MACD. So watch for the next stop and the next candle pattern in order to make a sell there. And that's pretty much all, friends. That's my opportunities. That's what I see in front of my eyes. Pretty much a lot of them this week. Again, I'm sorry it took a bit more than half hour of your time, but it was very important to me just to explain all the things and make it prepared to the things that should come. And I want you to know what to do and how to do when things happen. Friends, thank you very much for your time. I hope you enjoyed it. I know I enjoyed every week. I enjoy it again and again. For me, it's a really great opportunity to share, and I'm thankful for that. I wish you wonderful trading week, and all the best. Thank you. Yours, Vladimir.